Southern Company releasing second quarter results just a short while ago. Adjusted profit of 80 cents a share was 7 cents above estimates. Revenue is slightly below forecast. Here to break down the numbers, Southern Company Chairman and CEO Tom Fanning, also a former chairman of the Federal Reserve Bank of Atlanta until January when AutoNation's Mike Jackson stepped in. Former CEO Mike Jackson stepped in. He's still chairman. So, Tom, for those of us that don't run a utility, can you tell us what happened? I mean, most of the things, like almost all of your electricity sales were down. Is that due to the price of oil, the weather that customers were getting? You know, commercial electricity sales down 7.4, industrial down 5.2, total electricity down 7.2. It just depends on whether you need heat or air conditioning.
Well, let's think about that for a minute. If you think about industrial sales, for example, I know it's been reported that there is kind of bigger effects of that elsewhere in the United States, particularly in the Midwest and things. The Southeast, in fact, is seeing a bit of a pause. Our industrial sales, when you adjust for weather and all these other effects year over year, is about a 2% reduction. But I think about half of that is due to one-time effects or timing. So, look, we are definitely seeing a bit of a plateauing or a pause. You know, I've been on this show a ton of times, and we've talked about, for all the good tailwinds that we got from tax reform and smart regulation, we are seeing a bit of a pause. Long-term capital likes certainty in the markets. The trade skirmishes do provide some uncertainty, and therefore we are seeing a bit of a pause. We've been talking about that for a while. The other effect that I don't think people are talking about enough is really this issue of currency valuations. You know, past 18 months or so, we've seen about a 10% strengthening of the dollar this year, 2 to 3%. That is having some effect as well. But overall, when you look at our quarter, boy, I mean, we're hitting in every number we could hit. Our nuclear project, we're hitting our milestones. Had some exciting news yesterday that we put in an order for the fuel that will be required to run the plant. We expect that to be sometime the end of next year.
Meanwhile,
so a lot of exciting stuff going on.
Well, your stock, you know, you must really be a great CEO. No, I'm kind of kidding, but your stock is at near a high because you got a great yield and interest rates, and now they're going back down. So utilities are back in vogue.
Well, and let me tell you something else. I think the general thesis of an acceptable growth rate with a low beta, low risk, and an attractive yield, I think is a great thing when you consider the demographics of the country going forward. Yeah, it's fun to own Apple and the big growth stories. But as a retirement foundation, boy, owning companies like Southern Company makes a lot of sense to me.
Yeah, we're going to have Rick Perry on a little bit later. You're mostly natural gas now, right? It's not quite 50%, but that's the biggest thing that you're using. Prices are just, you can't budge those things because the supply is so great. It's like a wealth of, poverty of wealth almost.
Well, and here's the thing, Joe, that's so exciting to me. I would think we've kind of unleashed the energy sector here recently, and this is an unassailable advantage in a globally competitive worldwide economy the United States got to take advantage of. Listen, we're going to transition, over time to a low to no carbon generation fleet. I'm sure of that as a nation. But taking advantage of the blessings that we have in the current period only help to make this economy stronger, certainly relative to anybody that we compete with. So this is a great thing.
We're going to talk to Rick Perry about exporting LNG, and that might help a little bit in terms of the price. But people don't really see much movement in the price of natural gas for decades, really, because of the abundance.
Yeah, and you know what? I mean, here's smart regulation and a variety of other things, but this kind of technology revolution that has permitted the accessing of cheap, plentiful natural gas is great for everybody. You know, there's an emerging concept out here called energy justice, and what it basically says is when you consider people on the lower end of the income scale, we've talked about that in terms of Fed policy and a variety of other things, who is really sharing in the benefit of the recovery. Son of a gun, energy policy done well disproportionately helps people on the lower end of the income scale. And so taking advantage of these things is a great way to think about improving the economy for everybody.
Hey, Tom, Joe pointed out at the top at the introduction that you're the former chairman of the Atlanta Fed. As somebody who's running an energy company and probably has a pretty good feel of what the economy looks like in the markets you serve, and as somebody who's used to providing some of that input and data to the Fed, what do you think the Fed should be doing today?
Listen, in fact, I was also chair of what they call the Conference of Chairs. It's kind of an advisory board to the big Fed up in D.C. and was there at the time of the transition from Yellen to Powell. I know Jay Powell exceedingly well, and he is a terrific guy. Here's my sense. I know we get into a lot of short-termism when we talk about the actions of the Fed. The Fed, is, I think, really focused on long-term results, and they do analyze reams of data and not just take data, but turn it into information and insight. And I believe what they do is they try to take a long-term perspective. I believe that probably with the plateauing, this pause that we're seeing until we resolve some of the uncertainty in the worldwide markets, that probably a 25% cut makes a lot of sense. But I really do trust in the process of the Fed. I really do believe in that institution.
Steve Leisman raised the point earlier that the data doesn't look that different today than it did in December when they decided to go ahead and raise rates. Are there other things they're looking at, or are we not as data dependent as we used to be? Are we paying more attention to the markets?
Yeah, Becky, I don't believe they're paying attention to the markets. Here again, that's the short term. And when you asked the question, you asked it exactly right. The data today, okay? But the data I think that the Fed really considers is not just in-period data. It is projections. It is a lot of not only kind of macroeconomic research, but also insight they get from all the districts around the United States. What are people that have boots on the ground seeing in terms of what's happening in the economy? For example, that's why electricity is such a good long-term indicator. We have data that will show it's not just kind of last quarter, last year, or current period. We look at our economic development activity, and we can see that there is, in fact, a bit of a reluctance to commit long-term capital in light of these kind of longer-term uncertainties related to trade. Look, you solve those things, and I think we have the ability to breathe some more oxygen into another potential economic recovery. So I think he's doing the right thing.
All right, Tom Fanning, thank you for wear a lot of different hats for us, so we appreciate that. We'll see you next time.
Always great being with you guys.